McDonald's reported earnings before the market opened on Monday, and the market's actually reacting pretty positively. As I'm recording, kind of midday on Monday, shares are up about 4%. But the reason that I wanted to look at McDonald's earnings this quarter was they're often a proxy for how the economy is doing, what consumers are deciding to do. And one of the things I think is interesting about McDonald's recently is if you have been to McDonald's, you would notice that they have raised their prices an incredible amount over the last few years. We have gone from this being a place where you can go and get a relatively cheap meal. Yes, not the best food, but at least you know what you're getting, kind of comfort food, to now the prices are at such a level. If you get a value meal even, those can be in excess of $10. Now you're at the point where maybe just going to a sit-down restaurant is going to be not all that much more money than going to McDonald's. So it's going to be interesting to see how consumers react to this. What are they choosing to spend their money on? Are they simply saying, hey, we're going to go out to eat less? Are they shifting that spending to other restaurants? One number to look at is that Chipotle reported same-store sales were up 11% last quarter. Meanwhile, McDonald's said that same-store sales were down last quarter. I think that's pretty easy to see why if you look at the menu prices at McDonald's versus Chipotle and how you're going to feel after you eat McDonald's versus eating Chipotle. But I want to dig into some of the numbers and try to suss out kind of what's going on with restaurant stocks right now, because this is not going to be an even story for everybody. There are going to be companies that take market share. There are going to be companies that lose market share. And I think McDonald's is in a position right now where it probably pushed those prices a little bit too high. It's starting to pull back. You're starting to see $5 meals again. Don't be surprised if they lean back into that value play because they found out that consumers just don't want to spend that much money on McDonald's. But I'm going to get to the numbers in just a second. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's dig into the numbers. This is the second quarter 2024 release. You can see that revenue was nearly $6.5 billion, a slight increase from a year ago on a constant currency basis. But once you get down to these segment numbers down here, this is what's a little bit more important. And the first thing that jumps out to me is that comparable sales were down 1% in the quarter, reflecting negative comparable sales across all segments. So basically, there is weakness across all of McDonald's. The US decreased 0.7%. International operated markets, so the stores that they actually operate, decreased 1.1%. And licensed markets, 1.3%. I mentioned Chipotle just a second ago. They reported last week and they said that their comparable restaurant sales increased 11.1% and total revenue increased 18% to $3 billion. So this is the comparison is Chipotle, think about their food and their value versus McDonald's and their food and their value. That's, I think, how we kind of need to look at these two products when trying to figure out what's going to happen with the restaurant space overall. Now here you get to a little bit more detail. And if you look at these comparable sales numbers, this goes back to the second quarter of 2023. So in the second quarter of 2023, basically had double-digit growth across the board. And this continued growth that we've seen since 2019. This is from a presentation the management gave in late 2023. They said that comparable sales were up 30% from 2019. If we go back to that 2023 earnings report, you can see this is the same numbers that you saw in 2024, but this is the current quarter in this report. Comparable sales benefited from strategic menu price increases and positive guest counts. So what is happening in 2024? Comparable sales were driven by negative comparable guest counts, partly offset by an average check growth due to strategic menu price increases. So price increases are the theme here. McDonald's has been increasing their prices. How have consumers responded to those price increases? They are going to McDonald's less. Comparable guest count is negative at McDonald's. So this is really, I think, what we should take away from this earnings report is that if you raise your prices too far, you're going to lose customers. You kind of lose the thread. And I think this is one of the challenges for a company like McDonald's in particular is that this sticks with customers for a very long time. I know that our family has started to go to McDonald's periodically, and I'm always shocked at how much money it costs to feed a family of 4 at McDonald's, and that sticks with me. I would much rather go to a Chipotle or another option rather than going to McDonald's, in part because the price is just not all that attractive. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. As I mentioned, this impact is not going to be evenly distributed across the industry. This is a look at Portillo's. This is a company I've talked about a lot on this channel. I own shares of Portillo's in the asymmetric portfolio. One of the challenges that they had in the first quarter, one of the reasons the stock is down as much as it is so far this year, is their same-store sales were down 1.2%. Now, management talked a lot about the causes for that, and this is a much, much smaller business than a McDonald's is. But part of the challenge was pricing. And so they did a lot of work to adjust their pricing and provide more value options to consumers. Is that going to work? We will see when results are released on April 6th. But this is something that we're seeing across the board at all restaurant companies right now. The other offset to some of these price increases is that we've just seen commodity prices go up. And beef is one that I have looked at in the past. You can see from this chart, this is from Trading Economics. Beef prices basically tripled through early 2022. Those commodity prices have come down pretty significantly, about a third lower than they were at their peak, but it takes a little while for those prices to move through the system. So what we should be seeing in part is if there is a loss in comparable sales because of a reduction in pricing, we should see some margin help by the reduction in commodity costs. So that's the other thing to keep an eye on. The challenge for McDonald's, and the reason that I thought these numbers were so interesting to look at, is because their pricing is, the impact on pricing is to reduce the number of customers actually coming in the door. So there's going to be a difference, I think, between those two things. Chipotle, I think, is kind of off on its own. They are just a phenomenal operator. There's a reason that that stock trades for the massive, massive premium that it does. But where there's a little bit more opportunity is the companies that have really good unit economics, aren't losing those customers on a volume basis, and are able to kind of thread that needle from a pricing perspective to be able to operate profitably in the current commodity environment. Inflation is one of those things that's going to impact restaurants more than is going to a lot of other businesses. How do you respond, and how do consumers respond? This data point from McDonald's is telling you that at least with the kind of product that McDonald's is producing, you can't push those prices too high, or they're going to flee to other options, whether that's eating at home or it's eating out at other restaurants like Chipotle. So hopefully that gives a little bit of background on what we're looking at in the consumer space. I will be covering Portillo's in particular here when those earnings were released in early August. So check back here for that one. That will be an interesting one to watch because that's a much smaller concept, about 85 stores right now. So much more growth potential in the number of units, but they have had that pressure on a same store sales basis. That's what investors have really been focused on. So does that turn around in the second quarter? We will see. Let me know what you think about McDonald's results and what you took from the quarter. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.